Good morning, everyone. Thank you for joining us on this beautiful Saturday morning. So today's topic is one of the most popular topics nowadays. Everybody wants to build wealth. Uh, Crore is something that has become a popular vocabulary because of this wealth building craze. Also because the stock markets have performed very well in last 4 5 years, uh, opposite to the major expectations despite the pandemic and everything. But coming back to the serious topic, that how do you build your first crore rupees? If you have just started earning, this can look like a very big major dream. Although this is quite aspirational also, but down the line, looking at the economic scenarios and everything, this is also a critical financial goal for anyone who has started earning, who's trying to build their career or business in today's world. So how do you do it? This is what we are going to discuss today, and what kind of investments you can look at, and how do you select your investments. All this is going to be part of today's workshop. So let's start, and this is how we will go about this. So first of all, let's have a look at how much is a crore rupees. What can it do for you? And then why should you build such a corpus? Why not build a smaller corpus? Why only 1 crore or more? And then what are the investment options you have? Then how long it will take? And you can select, how do you select the investments? And before we proceed, go to the topics and details. Uh, a small disclaimer: any brand mentions or any mention of financial products throughout the workshop is just coincidental. It should not be taken as an advice or investment uh, suggestion. It's only for to explain things and put things into perspective. None of the things that we discuss in this workshop is a personal investment advice. If you want such advice, you need to contact a SEBI registered mutual fund advisor like me. And at the end of the workshop, you will get my contact information. Also, if you want to post questions, you can also comment under the video. Let's move on. And our regular famous quote: know your enemy or goal and know yourself. So, knowing your goal and knowing yourself, your own risk appetite and financial condition is important if you want to have a successful financial life and not get bogged down by the investment choices or uh, get into the spiral of borrowing and paying interest. And second most important principle that we have to adhere to and abide by is anything that you do has to safeguard or improve your future. If there is something, any investment that you are, or any financial decision that you are making today that is making you poorer in the future, um, it's better to postpone it and look for alternatives. So, how much is the 1 crore rupees? So with 1 crore rupees, you can have a monthly income of 58,000 rupees per month for the next 30 years without depleting the corpus. So, if somebody is retiring today, and if you are retiring today or in a few days, and you have 1 crore rupees or more in your retirement kitty, this is the kind of monthly income you can look at. This is assuming that your entire corpus is invested in a very safe deposit, which will give you around 7 to 8% per annum. And obviously, it will attract tax, but as per uh, the new income tax slab, up to 12 lakh rupees per annum is free of, doesn't attract any tax. So you can withdraw up to 58,000 rupees per month without any worry out of this corpus. Or if you want to withdraw inflation adjusted income, you can have like 38,000 now and then keep on increasing by 4-5% every year. You can buy stocks, enough stocks to get you like 2.5 lakhs per annum in dividend income. And obviously, when you buy stocks, you also expect capital appreciation, so that will be there. Or you can have 2.5 to 3 lakh rupees of rental income, that too inflation adjusted, and also capital appreciation uh, you expect from real estate properties. So all throughout the country, in India, economically, real estate rentals have been around 2.5 to 3 lakh. This I am talking about the real estate, residential real estate. If you go into commercial real estate, things are different, and you can have 4 to 5% of uh, corpus as a rental income also. But that depends on, again, the kind of property you invest in and where you do it. To give you a perspective of investing in stocks, not all stocks are going to give you 2.5%. Some stocks also give you more as dividend. Some these stocks that you see on the screen, Taparia Tools, Multibase India, MSTC, they have historically they have given 18%, 7.7%, or up more than 4% or 5% as dividends. But again, there is no certainty of history repeating. It's just to give you a perspective what kind of income you can generate out of 1 crore rupees corpus. And you can buy 6 lakh shares of Taparia Tools and 36,000 of Multibase India. So 1 crore rupees corpus is pretty good to have, to experience financial freedom to some extent, or at least start your road to financial freedom without any stress to your personal life or lifestyle. Also, if you are a real estate enthusiast, you can look at residential apartments in Gurgaon, Mumbai, farmlands in Jaipur, Lucknow, like cities, and even commercial properties in cities like Delhi. So 1 crore corpus gives you a lot of freedom and a lot of choices to invest and build your wealth. You can also, if you also have an additional income source, like if you are employed or running a business and you have a 1 crore rupees corpus, you can look at market opportunities, different kind of investment opportunities, PMS, and even AIFs, some AIFs, although AIF's ticket size is much higher, but that option is also open. And you can also look at, looking after long-term goals will become much easier with this kind of corpus. And you can also think of stopping to work for money. So if you have been in a job for a long time and you have built this kind of corpus, you can start to think of starting off your own or doing something that you love to do, turning your passion into business. That kind of 1 crore corpus gives you that kind of freedom, mental freedom to move on in life. Now, what does it take to build 1 crore rupees corpus? Assuming you have started working just now, getting 30-40,000 rupees per month as salary, and you can invest about 10,000 rupees per month out of it. I can understand if this could be a high jump for the starters for many people who have just started earning. But assuming you can invest 10,000 rupees per month starting today, and you want to build a 1 crore rupees corpus, the first thing to do is, since this is a big goal, big financial goal, you want as much time as you have to achieve this goal, to make sure that you achieve the goal. And assuming that you have approximately 30 years, if you are in your 20s, late 20s as well, so conservatively assuming you are 30 years old and you have approximately 30 years with you where you can build this corpus, and with of time you can expect moderately good ROI of 10% per annum. Assuming again this is post-tax, uh, and you will have an equity exposure or high-risk investments to go with this to generate this kind of ROI. And this chart shows exactly when you hit 1 crore rupees corpus and where you will be in 30 years. So in 30 years, you will have more than 2 crore rupees, but uh, somewhere in the middle, like about 22 years, 21 to 22 years, you will hit 1 crore. That is, you do not make any extra deposits. You continue investing only 10,000 rupees and you continue to receive ROI of 10%. If you are lucky, your ROI can be higher, 15 to 18%, or if you could increase your investment uh, more than 10,000 rupees per month, then you will achieve the goal much earlier than 22 years. So this is what it will take in numbers. But where do you put this money? This is the question which will baffle you most if you are planning to invest. And for any financial goal, the biggest question is where do you invest? And more than where to invest, it's much easier to find where to invest. You can go to you can just open your phone browser and search for where to invest my money, and you will get n number of options. The problem is not where to invest. When you have this question, the problem is where should you invest? Should you invest in equity stocks? Should you buy some stocks of a company? Should you invest in a mutual fund? Should you buy a insurance policy? What exactly you need to do? Which kind of investment suits your investment need and financial goal? And trust me, this is where all the mental jugglery is. Selecting an investment is very easy once you understand yourself. And this is that part where, so so far we discussed where you want to be, like your goal, and this is the part where we discussed uh, knowing yourself. So first thing we look at is what is the time horizon. So for this goal, we saw that you have 30 years of approximately, which is quite a long investment horizon for any kind of investment you want to make. In 30 years, really, if you buy a plot, if you can buy a real estate plot in 30 years, it can give you multifold returns depending on the location. But setting that aside, that's not the only thing. There are multitudes of other things. So after horizon, you are looking at liquidity. Just in case if you have to withdraw from your investment, will you be able to do it? That is one question. Second question is, will you be able to do it at the same value at least as much you have invested? Or can you withdraw, or will it be slightly lower? What will be the tax impact of that kind of withdrawal? As you know, if you have been following the union budget, you know almost every income is now taxable except for farm income. So even if you invest in stocks and you make a capital gain of more than 1 lakh rupees or 1.25 lakh rupees in a year, starting next financial year, uh, your capital gain will be taxable. So taxability also becomes a very important part, because if you are paying a 20 or 30% tax on your capital gain, and assuming that you invested 1 crore rupees in total, and that 1 crore became 2 crores, so 30% of 1 crore capital gain will be 30 lakh rupees. Your capital gain goes back to goes takes a hit by 30%. So taxability also becomes a critical part of it. Then what kind of growth you are looking at. If you look at equity markets history, Indian equity markets, on an average in the past, the returns have been 15 to 18% per annum. So, are you looking at that investing in this kind of market, or you're looking at investing in fixed income securities where the average return has been 7 to 8%, or maybe max to max 9%? So, past performance is what we are looking at. And then, how do you match this with your current situation, with what you are, where you are right now? So, matching this requires assessing your risk appetite. Risk appetite is uh, somewhat taken lightly nowadays, because especially when you are just starting, so you are free and you don't have a lot of responsibilities, so you want to invest as aggressively as possible in the hopes that your returns will be as good as you are expecting, as you want to be, or even better. Most of these investment decisions are speculative, and without proper risk assessment and understanding of your own financial needs and goals, most of the investments in high risk investment options are more like speculative guesses rather than scientific decisions. So, uh, once you have decided your goal, it's critical to understand, to develop an understanding of your risk appetite, and have a holistic financial scenario before you start investing somewhere. So first thing is to understand. So your risk appetite is consisting of three parameters. These three factors will affect your risk appetite throughout the life. And whenever you are going to invest, you can have this risk appetite or risk assessment every couple of years, where your personal profile like age, demographics, where the region where you stay, all these things can be taken into account to develop a personal, to decide your personal profile, and then what kind of profession you are in, what kind of income it generates for you. If it's a very high risk profession where your chances of job loss or chances of uh, income volatility are high, then your risk appetite is inversely affected. Like if your income is high risk, then you should not invest in very high risk investment options. You should try to use more safer investment options. And then the final thing is your aptitude, like your education and how well you understand the financial markets. And if I have to summarize in my experience, it's mostly the financial acumen. I have seen people who are not postgraduates, they are simple businessmen with probably a diploma for graduation, but their understanding of financial market is very, very uh, good. They are better than a lot of educated people like MBBS doctors and engineers. These people are very good at, they have a very good aptitude and understanding of financial markets, so they have a good risk appetite. They can invest in stock market, ask the right questions about the stock, understand it, and then invest in it. So aptitude is mostly the financial aptitude. If your understanding is very good about the financial market, if you understand what the stocks are and how they function, what affects their value, you are well versed with it, and go ahead and start investing in stock market. And once we have this profile, mutual funds are pretty safe bet. They are transparent. You can find most of the information whenever you go for investing in any mutual fund. You can find their risk profile. There are a lot of ratios that we look at while analyzing mutual funds. We look at their past performance, the kind of shareholding, the kind of stocks they are holding, and their overall profile and their investment objective. So accordingly, we try to invest in these